Hello traders, how are you? Vladimir here from Home Trader Club, and in this video I would like to talk about what is the best Forex strategy for beginners, and of course not only for beginners. How to find one and how to use one, how to implement that so it works for you. So before we dig deeper, and I will share what is for me the best trading strategy with examples, I would like to talk about the best strategy in general. Does that exist? Okay, so the answer is no, absolutely no. There is no such thing, one strategy that will be performing the best for everyone. The reason for that is very simple. Even though we all are trading the same market, in that case, Forex or any other financial market, we are all different. How we are different? Different with what the logic, the way we understand technical analysis, the way we understand how to enter and exit trades, our discipline, our availability, our level of commitment, our responsibilities. As we are all worldwide, we are different. If I am, for example, in Canada and some of you in Australia or in the UK or in the US or in Africa or in Asia or anywhere else, we are working based on different time zone. Because of all these factors, we never can be all absolutely the same. We are not robots. Even the robots are different. So you should not even try to emulate someone. Okay? You should not try to be like someone. You should always aim to achieve the best level of yourself, for yourself, with set of rules that work for you, okay, with set of rules that make sense to you, because in everything in life we can perform something on the highest level when we feel comfortable with that and we understand what we do. Trading is not different. In trading, one of the problems is exactly that the traders, the beginners especially, are trying to copy someone, to do something like someone, without really understanding what should be done, how should be done, and what should not be done. Okay, so in order to find this thing that is called the best Forex strategy, you need first of all accept the fact that such things, the best strategy, does not exist. Is there a best way to be a lawyer or a best way to throw a basketball or hit a tennis ball? No, it does not exist. And you can see how many tennis, the classical example, all they need to do is hit a ball with a racket. I mean, how hard it is, right? Of course, it doesn't look hard for someone who doesn't understand. But when you stop for a second and you check in the details, you dig deep to figure out what is required, you find out that it has so many different styles and so many different attempts and so many different paces and ways to hit and so on that we will surprised, right? That's why there are so many different players and not all of them perform on the same level, even though technically all they do is the same. They take a racket, they hit the ball. So same about that trading strategy. I can keep going and going with the examples, but I hope it's pretty clear that it's like anything else in life, not only tennis, of course, and not only trading. So the best Forex strategy, from my point of view, is the one that has clean, when I say clean, I mean for you, not for me, not for anyone else, for you, the user that applies the strategy. Set of rules. We can do the same set of rules, but the implementation would always vary because of our free time, responsibilities, commitments, dedication, different styles. So if I prefer the longer term, you might prefer the shorter term. And I prefer the majors, you might prefer the minors pair. Yeah, I prefer the euro dollar, you can prefer the Bitcoin, and so on and so on. Okay? Every one of us is slightly different, and that's okay. This is how it's supposed to be. So the first thing for the best strategy is clean set of rules for entries. Okay, that could be, if you rely on one or two indicators, that could be specific things that happen with the indicators. If you rely on multi-time frame like myself, then it should be what happens on time frame 1, what happens on time frame 2, and what and how exactly I'm going to enter on time frame 3. And I'll show you these examples, of course. Okay? So clean set of rules that should happen on different occasions or different time frames or different instruments or different levels or in different combinations of periods. Okay, and my honest recommendation is do not rely on just on one indicator. Okay, because it's a very common mistake. The traders blindly go only with what indicators say, regardless of the price, regardless of the time of the day, regardless of what higher time frames show and say, and it will never, ever work. Okay, never. So believe me from experience, save this mistake, avoid this mistake, and try to do it differently. Okay, it doesn't exist such thing that, oh, here is an alert, oh, here is an arrow, or moving average crossed, or whatever, boom, that's it. No. Indicators indicate, price dictates. From my point of view, and after all the years of trading experience, it has to be together. Indication and dictation by the price. Okay, when it happens synchronized simultaneously, your chances increase dramatically. Okay. The second important thing to have for the best strategy that will be the best for you is clean set of rules how to exit trades. I always tell that to my followers in Home Trader Club and everywhere, also to you who watch this video. If you rely on your techniques to enter a trade, then you have to rely on your techniques to exit the trades. Okay, there is a great saying here that one of our members keep saying that I absolutely love this, is that you should stay in a trade as long as there is a reason to enter a trade or to be in a trade. As long as this reason, this price behavior changed, that's it, game over. For example, if you are in a bullish trend, you want to see sequence of higher highs, higher lows. If you are suddenly seeing sequence of lower highs, lower lows, there is a good chance that something is changing. Okay, so that's just, of course, one example. So clean set of rules for exits. An exit could be and should be including also early exit, how to cut out early. Okay, very, very, very important, because if you will reach this level where you can save money, let's say you're risking 1% per trade, and you are able to cut early when the conditions for the trade changed, then you will be able to save money, and money you didn't lose is money that will stay in the pocket for you. So let's say if instead of 1%, you lost only 0.8%, that means you saved 0.2%. It looks small, it feels small, but it compounds. Okay? And together, if you saved it for 100 trades, for example, for a long run, that's 20% that you did not lose. It is significant. Okay, so it's very important you understand that that little thing, because this, at the end of the day, what will build the best Forex strategy for you. And the last thing that Forex strategy, and I said Forex strategy, it's, of course, it applies for any financial market. Okay, any trading strategy should have is smart, positive money management. Meaning, if you are risking Okay, I'll just go blank screen for example, just to present. If you are risking, let's say your risk equals $100 per trade, okay, and your reward, I'm talking about average, okay, it could vary, the reward could be different based on market conditions, but very important to the understanding, and your reward is $10, then this is not going to work, because eventually the market would hit you here several times in a row. So your risk must be clean compared to what you are looking to reward per trade. And there is one simple logic for that. This logic is the total. If you go with 10, 10, 10, 10, 10, 10, 10 dollars, and then boom, one trade you lost $100, what happens? Voila, you ended up with losing more than you earned. So what you will want is that your reward, okay, risk reward, would be at least 1-to-1 in case your accuracy rate is above the 50%. If your accuracy rate is below the 50%, then you would want, if this is your risk and this is your reward, okay, then you will want your reward to be bigger, like 1-to-2, for example. Okay, to present it best way in a table, here is the situation if your accuracy rate above 50%, and you go with risk and reward 1-to-1, which means if you risk $100, you're gonna profit $100. To present it on a table, that's how it looks like. $100, $100. Okay, just for example, 100, 100. But because your accuracy is above 50%, sorry, then you will get, this is more, right? Up to here, it was 50%, 2 profits, 2 losses. Now with third profit, you will be more than 50%, which means you already make money. Now take the example where your accuracy is 40% only. Okay, let's say, for example, your accuracy is accuracy. Okay, just a bit in short. Now imagine you profit, the risk reward now should be bigger than 1-to-1, so you can make profit still. So let's say 1-to-2. You're risking 1%, rewarding 2%. So if you're risking $100 and you lose 2 in a row, and then one profit would give you $200. Then you lose again, and you profit again. Okay, and you lose again, and you profit again, but then you profit again. Only 40%. 4 winners out of 10 trades. 4 winners, 6 losses, total 10 trades, 4 winners out of 10 brings you to what? $800 profit, $600 loss, total plus $200. Even though you just work with 40% accuracy, but thanks to the 1-to-2 risk reward. So smart money management is key. Okay, and it all starts with understanding your accuracy level, and again, not what any website publishes or anything like that. What works for you from track recording your work. Okay, if you try to skip this level and just instantly make money, it's not going to work. You have to go through these steps to figure out your accuracy level, and according to that, build your money management. If I work with about 70 to 80% accuracy level after all the years of experience, and I will work with 1-to-1 risk reward, then you understand that I can make 7 winners or 8 winners and 3 losses with 1-to-1 risk reward, and I will end up with more money in the pocket because of my accuracy level. I could go with smaller risk rewards in average. Okay, so the money management must include these factors. And every strategy which you aim to create the best strategy for you must have all these three elements. Clean set of rules for entries, clean set of rules for exit, and clear money management. So now I want to present an example which I will take directly from the Home Trader Club. Okay, so I'll show you here a trade that I took. For example, the Aussie CAD. You can see that right here. This is the trade directly from our channel. Okay, for the Home Trader Club members. And this was the trade. Let me just show it to you. Right here, this is our trade. So I will explain quickly the analysis behind it, my set of rules for entry, okay, how I analyze, choose the entry, my set of rules for exits, okay, and of course the money management. So that was the trade, and I want to explain the logic here. So if I go to the chart, here is what I saw according to my analysis. Okay, based on the just analyzing the levels after a downtrend that we've had here. Okay, what happened to be afterwards? I was checking the levels of sellers, levels of supplies. So the previous high of the downtrend, the last high of the uptrend created for me classical supply zone. As soon as I saw the weekly chart rejecting with this spike, this immediately was like aha moment for me. Then I saw the weekly chart making lower highs, lower lows on the candles, weekly candles. I go to the daily chart, and on the daily chart, at the end of this bullish trend, what I saw is this bearish divergence. By the way, I stop for a second because very important to say here, if any of the terms are scaring you or you are not aware of the terms, no worries. You can join the Home Trader Club and learn all the terms I am explaining and I am using in real-time trading ideas. Every single trade I publish is explained in details with my techniques. You can find my education here, full courses. You can find endless webinars on the subject, on all the different subjects, the strategies, the money management, risk management, entries, exits, and so on. And you can find, of course, our real-time trading ideas, videos, and a trading journal. Okay, and then here in our channel, you would get your access to everything as it published real-time. Very important thing. So don't be scared of the terms. If you want to dig deeper and learn exactly what I do, why I do, how I do, you're very welcome. Join us in our trading family, the Home Trader Club. You can find the link or just type Home Trader Club or just find below this video in the description. So going back to the daily chart, as I explained, at the end of the bullish trend, we got higher highs on the chart. And remember this weekly supply, okay? And then we got the lower highs on the MACD moving averages, completing a bearish divergence, okay? And then histogram and RSI all looks really good. And besides that, take a look on the volume. You see all these volumes from the higher time frame. This is what I have with this my indicator of mine, the key trading levels indicator. Look at this key trading level from the weekly chart. Okay, then we start to see the daily chart also starts to make the bearish momentum by making lower highs, lower lows. And this is my moment to say, okay, so maybe it's time to go and trade. So I'm checking, okay, daily also attempting to go and break this rising supportive line. Let's go to the 4-hour chart and see what do we have there. And I want to remind you, this is the trade. Right after the first move, pull back, and here is the trade. I want to explain my trigger here, okay? So what happened on the 4-hour chart was this flip. Look how at the end of the uptrend, okay, that was here ongoing, higher highs, higher lows, and then boom, for the first time, lower lows. Then we go all the way up to retest this zone. Look, lows, the last high is here. And look at the multi-time frame analysis here, right? This is exactly how I trade. For me, it's always multi-time frame analysis, okay, and levels. So weekly give me the sell zone, daily gives me the sell reasons, 4-hour chart makes the flip, making the lower lows and holding and respecting the high, and voila, we start to make the lower highs, lower lows again. We gain the bearish momentum, which I love to see. And this is exactly how I find my trigger. Okay, right here, as soon as we get the format. And now the idea for me is always how much can I risk versus how much I'm going to reward. So if I go with the invalidation zone, which is aggressive as the short one, right here, I'm saying, okay, so if this is my target zone here, okay, first one, and this would be my second target zone. So I'm asking, okay, if I go sell here, let's say my risk is going to be, just for the example, 80 pips. Checking, okay, for my target, how much can I get? Okay, very important question. If I get, let's say, 100 pips, it's already positive. If I have 120, it's already even better, right? 120 pips. I'm checking, okay, for the next target, I'm asking, okay, what is the minimum I can earn in that case? And what is the maximum I can earn in that case? Okay, that's how I make my decisions. It works in my favor. And remember that I explained the risk management and the money management decision. So if I work with, after all the experience with these multi-time frame techniques, around 70%, up to 80%, depends on the market period, of course, accuracy level, and I work with one-to-one risk reward, I know the numbers work in my favor. That's it. This is how I know this is the perfect strategy for me. Okay, so I get here, okay, so risk reward in my favor for the small one. And if the market continues, I can earn much more. This is like 1 to 3 risk reward. So if I risk $100, I potentially end up with $300, for example, okay, in a best case. And then the money management. So the way I manage is, as I said, as long as the conditions are with me, I am in the trade. The conditions with me means if I don't see signs against me, like bullish divergences on the time frame I enter and one higher time frame. So I stay in the trade until I saw, here we go, you see, all the way to the, you see, once again, this is our target zone, the 38.2, and here we are. Okay, we are reaching next to the target zone, as you can see here, and now I start to see signs against me. While the market makes the lower lows, the chart making higher lows. The indicator makes higher lows. This is a voila moment for me, and then I start to see higher highs, higher lows. Easy decision. So again, if this is my entry and this is my protection, look at this risk reward. I'm ending up here with more than 1 to 2 risk reward just by defining everything correct. Numbers never lie. And as long as you stick to this principle of trading, set of rules for entries, for me it's multi-time frame. And that's exactly what I teach in Home Trader Club. Every single trade I enter here and every single trading opportunity I share, that's exactly how I work. Set of rules and multi-time frame analysis. Then I check the risk reward and then I manage my trades. Okay, I cut out early if the conditions change. Of course, not every trade I can cut out early. Sometimes the market surprise and goes against, but sometimes the market also surprises and goes so fast to the target zone. So you just hit your target zone quick and then enjoy the big risk rewards. Okay, so this is for me the best strategy. Okay, so another example we've had on the Euro Kiwi, for example. Here, my set of rules was the break of this ABCD pattern. Okay, and by gaining momentum, making higher highs, higher lows. Let me quickly show you again the analysis behind it. Okay, just a quick one. So according to the analysis at the end of the bearish trend, which we saw here, okay, what I saw afterwards is that we start to make the higher highs, higher lows on the weekly chart. So I'm checking quickly. Okay, that was the previous bullish trend. This low was broken. The high before it, which is the supply area, was never retested. This is my downtrend. The last high was already retested. The previous one never was. So this is for me right here a zone of interest. Right here. So, okay, I keep this in mind, right? I say, okay, this is a potential zone for the long run. Let's see if the short term can fit inside. I go to the short term and I say, and I again making my analysis and say, okay, so we do have the higher highs, higher lows. We did have a pullback. This pullback now broke this bearish channel. We gained the momentum. We regained the momentum, making higher highs, higher lows again. It looks good. I'm taking this analysis to the lower time frame, and here is what I see. This is exactly what triggered me. Let me just zoom it in again. Okay, so here we are. We start to gain the momentum, making the higher highs, higher lows. Okay, this is the higher highs, this the higher highs, this is the higher lows, and then again higher highs, higher lows, lower highs, lower lows for correction, right? And boom, we got the breakup. And now we build again higher highs. So we can see multi-time frame synchronization, waves, and the momentum in the same direction. That's it. Nothing genius here, just a clean work based on the rules. And this is what I'm asking myself. Okay, so that's my target zone, my final target zone. Okay, I'm asking myself, okay, so if I enter here and I have to protect here, okay, up to here, the risk reward is big time in my favor. But even if we just go above this high, so let's just throw it straight line. Okay, I already have here classical risk reward. So if it goes here and starts to make signs against me, for example, like bearish divergence, higher highs on the chart, lower highs on the indicator. Okay, I say, okay, even if I do need to manage here, I will be already in a good risk reward. Works in my favor. Remember my analysis of my accuracy level? So even if you work with 50% accuracy level, ask yourself, if you enter here and protect here, and you would have to manage somewhere in this zone, or even the previous high, it already works in your favor, the numbers. So if you risk $100, but you will cash out, let's say $130, with 50% accuracy, you would make money. So you lose in one trade 100, another trade you earn 130. It would be plus 30. So it just small numbers, for example, but it all compounds and becomes great again. So I hope I managed to explain what a best strategy for Forex traders looks like. Very important concept, very important elements you need to pay attention to. And please, 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 this is a personal request, stop believing in empty promises that one sort of indicator can provide you the best strategy, the best results ever. Another important reason why there is no such thing, one strategy for all, is because even the market has different phases. Sometimes the market is trending, sometimes the market is reversing, sometimes the market is ranging, more volatile, less volatile. The phases are different. So there is no one strategy that will work all the time. You must have set of strategies in your arsenal so you can apply in different market conditions. I mean, think about it. Is that if you play tennis or basketball, do you apply the same strategy when you are attacking or when you are defending? When somebody hits a spin ball against you, or a backhand, or a forehand, or top spin, or a drop shot, or when you play 3 players against 5 players, for example, or something. Just take examples for your life. Would you drive the same way when you drive a truck and you drive a bicycle? Of course not. Ride a bicycle, not drive. Okay, but you got the idea. Everything changes, so you must have set of rules of everything, of entries, of exits, of management, extremely important for different market conditions. But the guiding line always have to be set of rules for entries, set of rules for exit, ouch, that was painful, and the many money, what do you say, many money management and risk management. As long as you keep that, because remember, the trading is the business of numbers. That's it. It's business of numbers. You keep it clean, you keep it smart, you make it work. It's all in the numbers. Okay? So I hope I managed to explain what best strategy looks like. And remember, don't try to emulate someone. Be the best of yourself. Improve what makes sense to you according to your availability, your time, your logic, what you feel comfortable with. You cannot perform well if you're not comfortable with something. Okay, you will be at the beginning not comfortable, but you have to bring it to the level where you're comfortable with the concept you are using, and it makes sense to you, and it delivers the numbers for you. So I thank you for your time watching this video. I hope you find it useful. If you did, please show your support, hit this like button, drop some feedback in the comment section. It's very much appreciated, and thank you very much in advance for supporting. So I invite you to join us in our trading family, the Home Trader Club, and enjoy your access to absolutely full trading course for beginners, for advanced and different levels, where you will get your access to all the real-time trading ideas and real-time trading education. Every trade I find, every trading opportunity I deliver comes with detailed explanation why, how, and when. Okay, enjoy the trading community, enjoy being part of the best Forex club. So join us, the Home Trader Club, with the link below this video in the description. Thanks for your time once again. Best to you and yours. I'll see you soon with more. Bye for now.